Welcome everybody. I think fall has begun. It is windy out here. The internet was in and out earlier today, and it's raining. I don't think anyone's getting snow yet, hopefully. If so, I'm sorry. Or you're welcome. I don't know. I shouldn't say you're welcome. It's not because of me, but welcome everybody. I'm excited. I've got a couple things today that I thought were really interesting and different. Uh, and I really want to start with those things here. I also have um, Chris on today. Chris, you can see her. She has been with us for many years. And actually, before she was with us, she was with another custodian and is very, very well experienced on really all things, all monies and assets going in and out, and how people buy assets, what to be careful for. Some people get mad at her sometimes because they're like, "Man, I just sent you this request to send $100,000 of title," and she's like, "No, no, no, you got to make sure it's titled correctly and the documentation's correct." And thank God for Chris, her and her department. She does a phenomenal job, and she's really out not to say no, no, no. She's just out to make sure it's compliant and make sure it's done right. And that's important for all of us, for you and for us, for the IRS. I put them last, right? But for you and us and IRS. And so that's important. So I've got Chris here today. She's going to actually work with me a bit today on answering a lot of questions and answers towards the end. I don't know if anyone's ever worked with Chris. If so, you can give her a little shout out here. If not, that's probably a good thing too. That means you just, everything was seamless. You submitted everything perfectly and it went through just great. That being said, a couple other things as far as housekeeping goes. Uh, Many of you are clients of ours. In fact, usually probably half of you. Usually have around 150 people on these, and half of you are clients of ours. Half of you are not and are not exactly sure what a self-directed IRA is, and so I will discuss that for a few minutes, and then I want to dive into what's going on in today's world, what I'm seeing, as well as what some interesting stats, and also going to talk about. We're going to go a bit deeper into Roths and why Roths. And so uh, before I want to share my screen here. Let's see if you can see my screen. View. Okay. Can everyone see my screen? Just my name up there? Yeah. Chris, you see it?
I do.
All right. All right. Chris, before I get started, is there anything that you want to share about yourself with the group here? Because I'm so glad that you're on with me today, especially when I get the hard questions. They're totally going over to you. But Chris, how long you been in the industry? What is your main focus? Because everyone here probably doesn't know you. So give a little intro.
Yeah. Well, hello, everybody. I'm Christine. Everyone calls me Chris, but I have been in the industry for going on 7 years now. So long time. Definitely had a lot of knowledge from the two different custodians I've been working with, but I work with your money. So incoming funds, outgoing funds, investments, assets, all of those things are my main function. But I have a lot of knowledge, of course, of lots of other portions of your investments and your self-directed IRAs. But I have been on the stage before in the Ask Me Anything platform. But it's just the first time that I've actually done this with you by ourselves, Greg. So
Oh,
thank you for
shoot. A
having me.
lot of pressure. A lot of pressure. I don't want to mess it up with you. All right. Well, hey, Chris, thanks for being on, and I appreciate it. And so let me just jump into it again. Once again, Horizon Trust Company, we are a passive custodian. So what does that mean? That means we're not your financial advisor. We're not an attorney. You should consult, any legal matters or any of your tax issues and or questions to your CPA. So I just want to throw that out there as a disclaimer. Now, I've shared this stat, and this stat comes up, and I don't know if you've noticed something different about this stat, especially those that have listened to me before. It changes, like it goes up all of the time. But more importantly, besides the trillions of dollars that are sitting in IRA accounts, over $20 trillion, and there's over 100 million IRAs. What I find interesting is this number, especially when the market has been pretty good actually the last little bit. It goes up, a little bit of change in the market totally changes. It goes from like 17 trillion to 19 trillion almost overnight. And so this stat we'll come back to, we'll talk about. But I want to share this with you as well because most of you, half of you again, have a self-directed IRA, and the other half of you do not have a self-directed IRA. But this stat basically tells you that almost 50% of Americans over the age of 18, right? Because there's like 330 million Americans ish, give or take, depending on the day you ask ChatGPT. Uh, there's about 40% of adults have a retirement account. So what does that mean? This is applicable to you. Does it mean that everyone should be doing this? Not necessarily. And we're going to talk about who should be doing this and why. So again, $25 trillion. This number continues to grow, especially as the market changes. So what I want to share first is a stat that I don't know if most of you, in fact, if you don't mind, in the chat here, let's talk about this. Who here has been told, or who here thinks that taxes are going up or going down when they go to retire, let's say 10 or 20 years from now? Do you think it's going up or you think it's going down based upon what you've read or what your advisor shares? Up, 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 up. Okay, up. Everyone says up. That's what I've said. That's what everyone says. The taxes are going up. Now that's partially true. Do you think you will also, so far, when I say partially true, in the last 10 years, do you also think that people are paying more in taxes today in retirement than they were 10 years ago? How about another chat on that? Yes, absolutely. Yes, yes. Okay. I learned something that was really interesting this last couple of weeks. I learned in the last 10 years, retirees are paying 1% less. Now, I know it doesn't seem like a big deal, but they're paying a little bit less in taxes on their retirement as they pull it out. Now, I couldn't figure out how in the world, why would they be paying less? And how potentially can you be paying less? Because you and I both think, and I 100% agree with you, taxes are going up. But how is it if taxes are going up that people are potentially paying the same or less? There's two things that happened in the last 10 years, which is why I'm going to talk about one of those things in great detail. I could talk about both if you'd like, but the second one's more about something fun. One of the top reasons why people are paying less on their retirement funds in the last 10 years, I'm looking here to see if anyone, boom, Edward nailed it. People are converting their money to Roths. So people are going, in the last 10 years, they've been systematically and in the right way and the right time meeting with their CPA and converting their traditional to Roth. So one of the main reasons why people are paying less in taxes is because they're not paying taxes on the retirement funds when they pull it out, because it's coming out of a Roth instead of a traditional. That is a huge, and I'm gonna dive deep into that here today. But that is a huge reason why it's gone down. Now I'm not getting all excited about it. Like, hey, we're paying way less in taxes. That's not, and this is an average thing, right? Some people are paying more in taxes. But the second reason why people are paying less in taxes, which is a fun thing I have no slide for, but which make a lot of sense, is those that are retiring in the last 10 years are moving to different states, state-friendly, tax-friendly states, right? So they're able to go and potentially pay less in taxes because they were in these states that had not only federal, obviously, but state taxes as well. So those are the two main reasons. We're going to talk about one. You can control both, by the way. God bless you. Move to Nevada. I don't know what all the states are. Obviously, Florida. Where else is there? I think Texas has that benefit. What other benefits are there? Although Texas crushes you on some of the property taxes. There's the handful of states that you can and should probably retire into to save money on taxes. But the thing that I want to talk about is your retirement account now. And if it's not a Roth, show you exact examples of what people are doing to convert and not pay taxes when they convert. And I think Edward or someone else mentioned in the chat, the loopholes of using your retirement account. That's what we're going to talk about. So if you have a retirement account right now, the first thing I'll say is you should absolutely be self-directing. If it's not self-directing, when I say absolutely, most of you that are listening should probably be self-directing, because you are types of individuals that do due diligence on your investments and want to be in control of your retirement funds. It is not for everybody. So for those that are listening today and who have a retirement account, this will be the only part that's a refresher for those already clients of ours. But if you have a retirement account with your typical Charles Schwab, Fidelities of the world, the big brokerage houses, you cannot invest in specific alternative assets like flipping a property, like lending, like investing with your friend and doing a different, some kind of deal or some kind of business transaction. Now, I know there's a lot of news out there, and we'll talk about this as this. That's one of the big questions people have been asking me is, oh, I hear that, with the changes in Congress and the different laws that you'll be able to invest in more alternative assets. This is true. I do believe this will happen, but not at the scale and at the level that we're at today. I don't foresee that Fidelity is going to allow an individual to move their $50,000 from their IRA at Fidelity, invest in a syndication deal or in a real estate deal. Now, I could be wrong. By the time that gets approved, probably, I'll have, 10 more grandchildren, but I hope I'm wrong, by the way. At Horizon Trust Company, and when you self-direct, you can pick and choose and unlock your funds to invest in what you know, like, and understand. So if you are not currently investing your retirement funds in a way that you like or that you want, you absolutely should be contacting us, and we can help you and answer questions and see if it's the right fit for you. Because like I said, it's not necessarily for everybody. These are the type of assets that you can invest in. The list is way longer than what's shown here. This is, again, a refresher for those that are brand new to hearing me. If you have an IRA or an old 401k, you, your spouse, your kids have some kind of retirement account, and you want to be investing in something that's outside of the scope of your typical advisor, that's what we allow you to do at Horizon Trust Company. Chris, who's on here with us, will make sure that your documentation's clean. She will review it to make sure it's correct and the titling and the vesting's correct. And if not, she'll get back to you and say you need to correct it. And once you do so, we will then process your request and get your retirement funds invested where you want to invest them. So that's the refresher, and I'm going to dive into the specifics of how to pay less in taxes in the future and converting your retirement funds into Roths and how to do it. So let me see here. So first, understanding. So for many of you that are listening, most of you probably have a traditional IRA. You have a traditional self-directed IRA or simple or SEP. What does that mean? That means you get a tax advantage today for putting money in. You don't pay taxes on the money you put into your retirement account. So then it will still grow tax-free, but then when you pull out the money, you will pay taxes on all of that money, everything you put in and everything that you earned. That's a traditional retirement account. A Roth, the whole idea about a Roth is paying the taxes on it now, so it can compound and grow tax-free, but then come out tax-free, which is one of the biggest, and someone mentioned in the chat, the loopholes that people are taking advantage of to pay taxes in the future when they go to retire. Now, this might seem like a simple thing, and it actually quite is a simple thing, but doing it the right way and at the right time is part of it, is the critical part. So I'm gonna kind of dive into that and share some kind of rules and what I see some people doing at Horizon Trust Company, as well as myself, how I've used the Roth IRA. So a couple things here. I've already said it's what the difference is between a traditional Roth. If you were to convert your traditional to a Roth, let's say you have $200,000, that full $200,000 would be stacked on as ordinary income tax onto your tax return. You do not want that. And so how do we get through that without paying taxes, ordinary income taxes on the full 200,000? That's what we'll talk about. So once it's converted, all the growth, and you can withdraw, and it's got to be there for 5 years and over the age of 59 and a half. So I'm going to give one example here. Now, this qualifies for a real estate professional. Now, if you want to understand what a real estate professional is, you can, again, I keep shooting over to chat. My kids have told me that chat is, answering half their questions at school. I feel like more and more our world is turning into this. But that being said, you can also talk to us. You can talk to your CPA, but you can find some fundamental, basic outlines of kind of how bonus depreciation works to help offset your conversion of your traditional account. So if you happen to be a real estate professional and you have to qualify to be a real estate professional, a certain amount of time and effort every year that you put into real estate. If you qualify, then you can you can get you do something called a cost segregation on a real estate project or a real estate piece of real estate that you own, an investment property that you own, and you can get a bonus. Basically, you can get a huge amount of depreciation written off this year for any of your real estate properties that you've owned in the past or that you've bought this year. So if you've owned something in for 5, 6, 7, 3, whatever amount of years, but you're just taking your small depreciation every single year, there's actually something now, and it's changed with new Congress. We can get actually up to 100% of a percentage of the building costs. So it's called a bonus depreciation because you're getting the depreciation all pushed up, most of it, into this year. Why would you do that? For this reason. This is just one example, by the way. I've got, there's other ways of doing it. But if you have any real estate where you can get a cost seg and get bonus depreciation, you can take that $200,000 that you were going to have to pay taxes on. And in this example, just one example, getting a cost segregation study, and let's say that you're able to reduce, and by using bonus depreciation, $150,000, you only will then be paying taxable income on $50,000. So you've now converted your whole $200,000 into a Roth, paid very little taxes. In this scenario, you'd pay taxes on $50,000 rather than $200,000. And now your $200,000 in your Roth continue to compound and grow, and then all of it will come out tax-free. It is a complete game changer. This is most of our clients, 75% of our investors and I'd say our clients or customers at Horizon Trust Company are real estate investors. They're investing in some kind of real estate, or they're investing with a partner in real estate. If you are a partner in real estate, you also, as a partner, can do this on a project that you have a percentage of and get a portion of that deduction on your tax return. As I said in the beginning, I'm not a CPA. I see lots and lots of individuals do this. I've done this as well. You should still absolutely consult your CPA to make sure that you qualify to get this kind of depreciation. But I'm sharing this with you because I would say probably at least 40, if not 50% of our clients most likely can qualify for something like this. Now, I am not, and this is not my job as far as helping people with the cost segregation. There is someone I recommend, and I'll give the name towards the end. I'll look it up. I'll give you his contact information. Jeff, he does cost segregation studies. You pay for those studies. He does them on these assets that you can then give to your CPA to get this $200,000 or $150,000 reduction. This is a game changer for those that are wanting to convert. Now, for those of you who are not real estate professionals, who have a $200,000 IRA in this example, that want to get into a Roth, many, many, many of our clients who don't qualify, what they do is they meet with their CPA and slowly convert their 200,000 over several years, 5, 6 years, into a Roth. If you're in your 30s, 40s, 50s, and you don't plan on touching this money for 5+ years, it absolutely can make sense for you to convert that $200,000 over a period of time to offset your expenses. Now, this is a lot of tax talk. Now, it doesn't get super exciting. I'll get to some exciting stuff about how people are investing in their IRAs. But to me, it's exciting because it's a game changer for you as you go to retire. So let's talk about why one would want to do this. Let's just take this one example here. Let's say that you have a $100,000 traditional IRA and it's earning 12% over 15 years. When you pull out that full $547,000, you will pay $120,000 on average, right? Based upon this, on 22% of taxes. And we all believe that's going to go up, right? So it's probably going to be more than that. You end up with $420,000. In the same exact example, If you're able to convert that $100,000 into a Roth and do it strategically over a 1, 2, 3, 4 year period, that same $100,000 that's worth 547 comes out fully to you with zero in taxes. So this simple concept, this simple idea and or process of moving your traditional or your traditional type accounts, simple SEPs, etc., and converting as much as you can to a Roth over time will save you, and in this example, over $120,000. It could potentially save you more if you got bigger accounts, and if you do it over time, that's okay too. That's over a 15-year period. Now, I want to list this because I've got, I've got this in me, and hopefully most of you got this in you as well. 25 years. I know Chris has got this in her, more than this. So, same example, but the power of compounding interest, just the power of those extra 10 years. See where it went from an extra 10 years of compounded interest went from $546,000 to 1,000,007. I mean, it's tripled just by adding 10 years by the power of compounding interest. So now it's very substantial. Now, when you go to pull that money out, it's either 1,000,003 or 1,000,007. It's almost a $400,000 difference by paying the $22,000 in taxes now. Does that make sense? I hope that makes sense for everyone. Getting your money into a Roth is really important. Doing it at the right time, meeting with your CPA, finding out when you should move it over, what years you have some tax write-offs. And I can't tell you exactly which write-offs that you can take that offset. That's going to be meeting with your CPA. But if you meet with your CPA and say, hey, I've got this self-directed traditional account, I want to get it to a Roth. I don't want to pay the taxes, or I want to pay a limited amount of taxes. Help me get creative, either with bonus depreciation on any real estate you got, or other tax depreciation or other tax credits you might have. So you can strategically move those funds over. This might sound like a simple thing, but this alone, especially the bigger your account is hundreds of thousands of dollars of savings to you by doing it at the right time and not just waiting and doing what everybody else does. There's loopholes. I'm going to go back to the comment someone said in the chat. There's absolutely loopholes that the government's created that are completely legal that you should be taking advantage of to avoid or defer paying taxes. So even after paying taxes up front, the Roth IRA can outperform long term, especially if tax rates rise, just like we've been talking about. So I want to jump into examples. I'm going to go back to about money here shortly, but one of the things people ask me often is, why do people, like investing their self-directed IRA in real estate? And it really has to do with these bullet points here. People understand real estate. I think most, I came from the real estate world. I was a big lender. I did a lot of syndications. And I like rocks over stocks. That's just kind of my thing. I like to have something tangible. I like to know when the market does slump, because it does in real estate as well, that I still can continue to get, interest coming in, rental payments coming in, lease on an office building or storage units. I like that. And so for me, it makes me feel more comfortable. It's not for everyone. And, I've shared before in the past, my son invests in different alternatives, from construction equipment he's flipping to different notes and that he's doing. He's done, I think, one wholesale deal in his Roth IRA. So, it's up for you to choose. But I think most of our clients like some kind of real estate, probably because it's where our company has so much experience on a daily basis. And Chris sees this, literally millions of dollars come in on self-directed every single day. And we see millions of dollars going out from our clients, investing in people's funds, syndications, flips, wholesales, title companies, lending. Real estate people like and understand. You still got to do your own due diligence and make sure that it's done, the documentation's done right, but also so you're comfortable with who you're investing in. And that's probably, I could do a whole probably session on how I choose what I invest in. Not for today, but I will tell you the number one thing that I look at, besides making sure documentation's all accurate, making sure my IRA is protected. My protection really lies upon who I'm investing with. It goes back to knowing and understand who you're investing with. Because I've seen a lot of good performers over my years, and a good performance is really good on paper, but not necessarily how the results are going to come out. So most people like to invest in some kind of real estate. Now, for those of you that are realtors, I just added this slide this last week because it's been something that's come up because there's so many people that are realtors. You might be a realtor, your spouse might be a realtor, and if you are, what you've seen most likely is, I would say, 85% of the realtors or brokerage houses that I've met with or talked to have had a tough 12 to 18 months. The market has been rough. There's been less buyers, less sellers, and less opportunities. And so that being said, if you happen to be one of those or know someone that is, understanding what I'm talking about today, understanding the self-directed IRA can allow and or help you get an additional 5 or 10 or 15 deals done. Now, how? What does that even mean? What that means is if you have clients, and you can put this your hat, your any kind of hat on here. It doesn't have to be real estate, but if you have clients, customers that are doing a transaction with you, and in this case, a real estate transaction with you, and they're buying an investment property, but you ask them if they have an IRA and how big it is, and if they would like to use their IRA to potentially buy and hold a real estate transaction with their IRA, you now potentially turned your investor who bought one property into an investor that could buy 2 or 3 properties just by asking if they have an IRA and asking if they want to use their IRA to potentially buy an investment property. This alone has helped realtors that understand it, that start asking their clients if they have IRAs to buy, if they want to buy real estate with their IRAs. This will get you an extra 5 or 10, if not more, deals closed a year. Now, if you're a realtor, you understand what that means. This is a big deal. Again, a nice nugget of education here that can give you an extra 10, 20, $100,000 in commissions. Just by asking this question, people that buy real estate would prefer investing in real estate with their IRA because they understand it. So the industry is ripe for that. People have retirement accounts. We just talked about it in the beginning, over 130 million that have over $25 trillion. It is all around us. So I wanted to share another example here. This actually example is I know this example. This is my son. My son bought this property, Carson in Alabama. And now why Alabama? Well, my son is 23. He can't afford a home in other places of the country. And I think a lot of people have asked me that. Oh, I really like real estate in California, but how do I do this in California with a $25,000 IRA? Probably not possible. And in most places, right? But this case, he bought a single family property for $25,000. It's worth $31,000 today. He refinanced it, and he's got it rented out. Got a tenant in there. He's got cash flow. Continues to bring in money. He did a new loan and took out the purchase price. Got his money back. This is a simple deal, but you can see the type of return. Obviously, we don't offer investments at Horizon Trust Company. Lots of others do in your areas where you might live or how you probably were even introduced to us. But this is a simple example of someone with a small amount. He did this inside of his Roth IRA with just $25,000. And now he's got an asset that's worth now $31,000 that's cash flowing. So simple thing with a Roth IRA. A lot of people like to do lending. I like lending, frankly, a little less work. This is another one that I know this gentleman as well, Todd. He's been self-directing for almost longer than I've had a trust company. He's turned his $33,000 and kind of rinse and repeating, doing the same kind of thing. Bought a property out of foreclosure with his IRA, rented it for over 14 years at $600 a month. Now it's worth 100. The sale price is 160. He's generated 260,000 on a $33,000 purchase from his Roth. Now I know this gentleman because I've talked to him several times. He also is one of those individuals that has done exactly what I started this presentation with about converting his traditional to a Roth. He converted his traditional it was quite large, into a Roth over like a 7-year period. He just, every time he could have some little bit of tax breaks or bonus depreciation, he would convert a certain amount of his money over, met with the CPA, slowly by surely by slowly, surely, my goodness, moved his funds over from, I got the rain brain right now outside here. So moved it over into a Roth, but over 7 years. So this is a long-term game. And this is a lot of what we do and what we talk about at Horizon Trust Company. This is the goal is for you to have more money in your retirement account than if you were just to leave it where it was at and what it was doing. And we hope that that's what you do, that you're able to take action, invest in assets that you understand, build the long game here. When he bought this property for $33,000, he probably wasn't talking about the rental income for 14 years. But look at that number. You too can be doing this with a small account. This is a great example of a small asset as well. Promissory notes, another example. See lots and lots and lots of these. A simple, in this example, interest rate of 13%. And over 3 years, if you invest $85,000 at 13%, your account's at $122,000. Simple things that make really big differences as you compound it in comparison to compounding the mistakes you might be making or just not taking action in a retirement account. I can't tell you how many times I've heard people that say, I have this old 401k that has 10, 20, $50,000 and doesn't know where it's invested. And it's probably got the same amount of money it had 5 years ago. No one's paying attention to it. Take control of your retirement funds. Take control, test it out. Everything I'm talking about here today, and the list goes on and on much further, you too can be doing these things. You can be investing in asset class that you like, that you understand. You can do it with a portion of your funds. You don't have to move over your whole retirement account. You can leave lots of money or whatever percentage of money with your advisor and have them invest those funds for you. So that is something that you can do as well. You don't have to do all of the funds. Gap funding, you can put down a little bit of money and charge a big interest rate over 60 days. I've seen people do that as well. This gets really sexy. The returns get really big. If you're able to do, I wish I could find more of these. I think I've only done two. So if you understand that world and the people that need it, and you can just fill that niche of 30 to 60 days and use your IRA monies, yeah, that's a big deal because you'd be paying full taxes on that, on your gains, or zero taxes if you do it with the Roth IRA. And now remember, you can also do this within the checkbook LLC. So once you have your retirement account, we can help you set up the checkbook. And then I wanted to share this as well. This has come up. We did a slide on this just to share, especially right now. We've had this promotion here for the end of this year. For those of you that are already have retirement accounts with us, you can absolutely use this for your friends and family and spouses who maybe not have rolled their accounts over yet. That's our first year annual and setup fees $495, and you can see that in comparison. So if you have not yet self-directed, or if you have, awesome, good job. Hope you're taking advantage of it, and hopefully you're getting a conversion. You're converting to a Roth. But if you have not yet, or your spouse hasn't, or you've got another account, now is a good time. Or if you want to get your kids set up, I've got two of mine. Of my four kids, they've got. I should say that I got a fifth now, Chris. You know that, so I should say five. But I'm not a big proponent of funding my kids' accounts. I want them to fund their own retirement accounts. I definitely implore and teach and educate. But so for two of the five, obviously the fifth, I don't. She's just worried about nap time. I feel like if you also have kids that want to be investing with you, they can be doing that side by side. If you've got $100,000 IRA and they have a $5,000-$6,000 Roth, they can invest pari passu with you, and so they'll have their pro rata percentage of that deal with their Roth IRA as well. And that's absolutely something that I think all kids should do. Now, I'm gonna take a deep breath here. I'm gonna have Chris help me answer some questions here also, and answer. Hopefully you've put some in the chat and/or in the question area. But before I take it off this full screen, I want to just put this in here. You can always contact us at our website. My email is down there below, Greg Herline at Horizon Trust Company, or HorizonTrust.com. email me, ask any questions you've got. Get with your CPA and ask them about the conversion or see if you can qualify for a real estate to be a real estate professional. Taking advantage of those tax benefits, I hope, in getting into a Roth, I hope that's of value to you. Hope you can see in those first slides, paying the $22,000 today will save you hundreds of thousands of dollars in taxes tomorrow just by making those little tweaks and by preparing today. And for those of you who have not started self-directing yet, absolutely email me and say, yes, you'd like to learn more. Me and my team will see if your account qualifies, what kind of account you have, and if it qualifies. So with all that being said, I'm going to stop the share here, and I'm gonna have Chris. First comment, Chris. What did I miss? What questions should we start with? Give me a little feedback because I did all the talking here the first 30 minutes.
Yeah. So it's funny because some of the questions that you asked were already answered in your presentation, which is great. There were a couple of other questions that they're asking to kind of expand on what you were mentioning. You did say you showed the diagram of our fees and comparisons, but one of the questions is what is the custodian fee? So what is our Horizon Trust custodian fee?
Yeah,
So
so the first year is 495. That's for your right now. We're doing it as a promotional. First year, it's your annual and first year fees. That includes everything, by the way, which is the unique thing about our trust company compared to anybody else. We don't charge wire fees, transactional fees ever, actually. And then in year two going forward, it's based upon the asset. So it's anywhere from 25, 30 basis points, which is a third of 1%, all the way up to 1%. Because that when I say 1%, anything less than $40,000, we charge $400. And so I would say the average fee per year is about $500 to $700 per year, depending on how big your account is. But that includes everything. So in comparison, when you look at our competition, they're charging transactional wire fees, all kinds of other fees. Only other fees we ever charge are tax related. So that is it.
awesome, thanks. Also, I'll add in there too that we're pretty transparent with our fees too. So that fee schedule is on our website as well if you wanted to get more of an in-depth information on our fees. So you can always check it on horizontrust.com. The next
Oh,
question.
go ahead.
They ask, can you comment on the solo 401k with the Roth component and the advantages and disadvantages of that compared to an IRA?
Yeah. And by the way, anytime you want them. Okay, that's David and Dorothy. Good question. I see you all the time. Thanks for being here, you guys. Always wanted to learn more. I think about you guys, David and Dorothy, because I know that you're always on here. So I always want to make sure I've got new stuff for you guys. So, but thanks for asking that question. uh, David and Dorothy. So the biggest advantages of having the solo 401k is the ability to contribute more money into your account. When you have a solo, self-directed solo 401k, which I didn't talk about today, but for those that want to learn more about it, absolutely email us. Uh, you're able to contribute more money in there. Furthermore, you're able to take a loan out against those funds. And so that's also the big advantage. If you have a traditional account, you can't take out a loan, nor can you contribute. There's the max contributions are a lot less. Is there anything else you'd add to that, Chris?
No, I agree. I think that is the biggest, the most advantages that you would have for having a solo 401k. So I agree with you with that. Same tax advantages with having a Roth version of it and then just the standard Roth. So, but the solo 401k definitely has a lot more options for you.
Right.
Okay. Other questions? I should have had one prepared. Sorry.
No, you're good. I mean, I'm seeing a couple on here. Well, and by the way, Sheila, it's awesome to hear about property taxes potentially get rid of in Florida. Besides not having state no property, come on, they really want people to move to Florida. When you sell a property, when you sell the property, this goes. I think Robin, this question is relatable to the bonus appreciation. There is recapture potentially, and so again, this is something that it helps you through taxes today, and there will be some recapture of a depreciation potentially later. And so the best model that I've seen is every year. I do it even for myself. I try to have one or two assets that I buy every year where I'm getting this tax write-off, the bonus depreciation. So that's one way to kind of combat that, Robin. But that's something you should absolutely meet with your CPA on, Robin. That's a big one.
We have a few questions asking how do they convert their accounts. So Kieran, Sanjay, and Jean have all asked how you convert either a SEP, a 401k, or a 403b into a Roth account.
You want to answer that one, or you want me to jump into it?
Sure, I got it. Yeah, so the first thing is obviously we need to have a Roth account open for you. So you need to have a Roth account open with us. And then it's as simple as number one, getting information from your original account, whether that is your SEP, your TRAD, your 403b. We need to get that money moved over to us. And then we'll put it into a traditional IRA first, and then we'll move it and convert it over into the Roth account. So a couple forms that you would fill out with us, and we will help you get that done. So pretty simple process on your end. We'll do the work for you.
Now, the only thing, if you have a 403b, there's certain plans or a current 401k or current 403b. Just a reminder, if you still are contributing and work there, we can't convert those to a self-directed until you're no longer there. So just make sure you've already left. There's so many of them, by the way. Almost everyone that is no longer working and they have at that, maybe even if you're still working but not that past employment, that account can transfer over to a self-directed IRA.
Awesome. Faustino is asking. So he says he'll lose his employment soon, and he'll have about 500,000 in several different 401k accounts and an annuity. He's asking, should he convert it to a Roth IRA, and will he pay taxes on it if he converts it?
Okay, well, again, this is this. I'm not a CPA, so uh, I don't know enough about your tax situation to give you too much feedback on that. But what I would say is, it really depends on when you plan on start taking contributions. If you don't plan on taking money out for a while, 5+ years, it could probably make sense to convert some or all of it to a Roth. But if you plan on, if you're going to be retiring soon and start taking the money out, immediately, some of the money, then it might not make sense to convert to a Roth. That's something you should definitely, knowing your timeline, Faustino, and talking to your CPA would probably help answer that. But you can use that money once you are no longer employed there. You can move it to a self-directed IRA where you can invest in these different alternative classes.
Thank you. All right. So Carrie's asking, what is the timeline for conversion to qualify in the tax year 2025? And does it have to be done by December 31st, 2025? I can
Slowly
answer.
but surely, by the way. Thanks, Carrie. Go ahead.
Yeah, I can answer this one for you. So, in order for it to qualify for the 2025 tax year, it does need to be converted in this year. So, you had it right. December 31st is the time frame that you need to get it completed by in order for it to count for this year. Yeah, there was a couple people
Uh,
helping you with this, Shirley, with slowly but
Yeah,
surely.
thank you. Thank you. All right. Gosh. That's embarrassing. Okay, so appreciation. It's funny, like if you're not on screen, you know it right away. But when you're on screen, like it's like the simplest things will go out of your head. Anyways, thank you. Julie, you said all appreciation goes into the Roth and Todd's example tax free. Yeah, in that example, Todd bought that foreclosed property, I think for $33,000. Got all the rental income went to his uh, Roth account, paid no taxes on that, obviously. When he goes to sell his one at 260, all of that full 260 will go. Well, I'm sorry, I don't think it was. I think it was at 160. The 160 will all go back into his Roth, all tax free. It won't pay taxes now or ever because it's inside of his Roth. That's right, Julie.
All right. So you were giving some examples of different types of investments, so promissory notes, gap funding, and debt financing. So Robin is asking, where do you find these deals?
That's a great question. Me personally, I find them as I'm out. I find myself in different masterminds or real estate groups or RIAs or uh, I've been in the real estate world now for 23 years, and so I happen to get probably I'm on so many email lists and groups and hear things, frankly, more than I want to hear. So for me, it's all around me. If it's not all around you, I would say find yourself being in these, in these situations or in these different rooms or places. That being said, I know Chris Nagel's got a group too, Private Money Club. People go to. If you Google Private Money Club, a lot of people have found some success there. There's different opportunities where you can do your own due diligence to see if there's a fit. But there's quite a few, and I would just do your due diligence, making sure you know who you're investing with. That's probably one of the most important.
Yeah, I'll also add too, if you guys are on our Facebook group, a lot of the deals come from you guys. So you guys will go ahead and share the deals that you're interested in or that you may have available, and you guys can kind of go in together with whatever is coming up. So if you're not on the Facebook group, definitely go on there and check it out and see, you might be able to interact with your peers and find some deals that way.
Sean, yes, we do have a checkbook LLC. We absolutely can help you with that. Lots and lots of our clients have a checkbook LLC. TSP says they'll allow conversion from a traditional to Roth at some point in 2026. That's awesome.
Okay. And Julie's asking if you already have a Roth older than 5 years, can you use that as a basis for further contributions from a 401k conversion at retirement?
Hmm. You already have a Roth in 5 years. Can you use that as a basis for further contributions? You can transfer funds from an old 401k into into your Roth that you already have. Yes. The basis as far as the holdback will be 5 years for those new dollars that you transfer over. So if you have $50,000 in a Roth, but then you have a 401k that's now you're going to convert and transfer over into that 50,000. So now there's another 50,000. That $50,000 you've got to hold on. You can't contribute or you can't take out within 5 years. If that makes sense.
All right.
And you
Nelda's
put your
asking,
Yep.
can you put your primary residence in the Roth? Um, I'll answer that and say, no, unfortunately, you cannot. You can't own something personally and then add it into your self directed accounts. Unfortunately, that is a no go with IRS. So it's not a Horizon Trust thing. It's definitely IRS saying, no, that's not an option.
Mhm. Man, you guys, good questions here. Okay. Can't do it with your primary residence. That's right. You can invest in stocks. I'm going to kind of pepper through some of these kind of quick. You can use your self-directed IRA in stocks. What's the max you can contribute in a Roth if it's in the checkbook LLC? The checkbook LLC is not the vehicle in which tells you how much you can contribute. It still would be your Roth. So if it's a Roth, the max contribution, if it's not if it's not an account set up with your 401k, is what, $7,500, Chris,
For the
in a
contributions.
Roth. Yeah,
It's 7,000, 7,500. Yes,
yeah,
correct.
7,500. And and that's if you qualify, if you don't make too much money. So, Randy, I see that question. If you're not, if you definitely email us. A reminder, you've seen it in the chat. You can email me, Greg Herleen, at horizontrust.com. And by the way, if we don't get to some of your questions, schedule an appointment to get your IRA set up. If you haven't already, and/or, we'll answer your questions if we haven't done so sufficiently here. I'm new to all this. Do I need to get into real estate before I start this? Justin, that's a great question. You don't need to get into real estate if you want to self-direct. I always recommend investing in asset classes that that you understand. We got people investing in cryptocurrency, and that's something they understand way better than real estate, or in precious metals, or in notes. And so, if you don't know where you want to invest your funds, it might make sense to hold off. There's also something called the investment corner at Horizon Trust Company. If you are a client of ours, you have access to the investment corner. It's not something that we vet, as far as we don't endorse and say invest with them, nor do we get paid if you invest with them. It's a place where you can do some due diligence on different asset classes and find out more and potentially invest in oil and gas or in real estate or in different notes. But that's called the investment corner, and that might be a good place for you, Justin, as well. And I'll get you some access to that if you're interested. Just shoot us an email. I didn't think you could depreciate your primary residence. Not sure what that means, Nelda. Uh, Justin, why have the 401k over a Roth? Oh, well, a big thing in the 401k is you're able to get some really big tax uh, benefits today. You can put a lot more contributions inside of a 401k than a Roth. So let's say you make $100,000, but you contribute, $20,000 to your 401k. You're only gonna pay taxes today on $80,000. So that's a nice tax advantage. Then later on, you should probably convert that money into a Roth. So that's probably one of the bigger advantages. Do I have a good tax accountant? Nelda, I've started with a new one. My old one passed away actually, sadly, and so uh, I'm still a little new. I think so. Not one I think I want to share yet. But if you have tax questions, I mean, I don't mind introducing you to them. I think they are great so far, but I'm also real hesitant because it's my name. So when I say someone, I feel responsible for that, and I am not, right. I've told you that I am not responsible for it, but I could refer you if you'd like. Can an existing Roth be transferred to you? Yes, an existing Roth can be transferred to us at Horizon Trust Company, Julie. So if you've got a Roth, absolutely, we can help you transfer it over. Just again, email us and say you're interested, and we'll schedule an appointment with you. That's my sister. I do not plan to retire 15 years. I think that Faustino, that was another question from above. I forgot what his question was. He's not retiring 15 years, which probably he was talking about. He was the one talking about contributions and or distributions. We're converting it to a Roth. So yeah, if you're not retiring 15 years or taking money from your time 15 years, it probably makes sense to move transition funds over to a Roth, Faustino. So
Robin's asking
uh,
if you create a Roth self-directed IRA, a new Roth account, and then the Roth you transfer from, sorry, if you create a Roth self-directed IRA that's new, and then the Roth you transfer from, which is existing more than 5 years, does it restart the 5 year term?
it does not. It does not restart it. Nope. All those funds are, there's no 5 year there. Can we invest in coins? You can invest in certain coins, not all coins. And again, you can reach out to us. We can tell you which ones are acceptable to hold. You can invest in precious metals and certain coins, yes. I don't have a contact for CPA, Ingrid, in California. I'm sure there's great ones. It's a big state. Uh, Nelda, yes. Thank you, thank you, thank you. How do you address that? But those with IRA who will say they don't want to touch their retirement, how do I address that? Oh, Margaret, you're talking about other people with funds. Look, I think that's a fair thing. Like, Margaret, if you're talking about discussion, and I've got YouTubes on this subject, you can Google that on YouTube as far as videos talking about with people that have retirement funds. Go check me out on YouTube, and there's tons of videos. It's definitely worth your while. That being said, if people don't want to touch the retirement, want to leave it where it's at, that's their prerogative, and that's okay. But I would say most people have fatigue of the market and just don't know their options. I've found that most people that have retirement accounts, especially when I was first starting, had no problem lending me $50 to $100,000 and doing a deal with me in their IRA because they wanted to be out of the stock market. But everyone doesn't want to be out. And that's okay too. There you go. I think that you've seen them there. Again, follow us if you want to start a 401k or a self-directed IRA. You've got all my information there. Connect with me on Instagram, YouTube, all of the things that are out there. I'm not big on all the crazy social media except for sharing a bit about family and a bit about what's working in my clients' lives. So yeah, Jeff's information for cost segregation studies. Carrie, you asked it. I said I would give it to you towards the end. I'd like to do that here. Jeff, Chris, can you type this in? I'm gonna just look it up here.
Sure.
Jeff's Jeff's email for looking for if you're looking for cost segregation and shoot delete draft bonus depreciation. Got his Cell phone number. I prefer not doing his cell phone number, but I don't think he'd be mad. All right. His cell phone, Chris is putting this in the chat right now. It's 508-878-4846. What I would recommend is texting him. Don't call him. I text him and say, hey, we got your information from Greg Herleen. He talked about you and would love to see if there's a fit, and then he'll connect with you with one of your properties. I'm going to wrap up here. There's a few more questions here. I can only convert a 401k if you don't work at the job anymore. That's correct. You can't move your retirement if you have your 401k if you're currently working there. I'm a realtor. How do I convince them to use an IRA to buy real estate? It's if they're already, Margaret, if you're a realtor and your clients are already buying real estate, they probably don't even know that they can use their IRA to buy real estate. You shouldn't have to convince them. I found that people that buy real estate would love to know they have more money to buy real estate. So it's more of a lack of education. They don't know they can do it. So yeah, that's the big one. So we'll wrap up here. Actually, I'll end with this one. Is a traditional IRA converted to a Roth and a traditional Roth traditional the same thing? No, it is not. A traditional IRA, and then there's a Roth IRA. So it's not a traditional Roth. So it's just a traditional and a Roth. Sorry, lady, if I didn't explain that well enough. Look, today was great. Chris, any final words you've got here as we wrap up?
No, just in the chat, there is where you can find the information on the replay, and then also where you can go ahead and schedule a call with one of our teams. And that we can get more information. If you have any more questions, just give us a call, send us the email, and we'll help you out.
I appreciate look, your questions were awesome, very much on point. Chris, thanks for being on here with me today. And I hope if you're not self-directing that you do, if it's the right fit for you, and just reach out to us. We'll answer your questions. We want to make this really easy. It should be seamless, should be comfortable, and should be the right fit for you. There's zero hard sales with us. We are a family that we want people to choose us and want to work with us and refer us clients. Look at our reviews. You can tell from our reviews, people really appreciate what we do, and we love what we do. So reach out to us, shoot me an email, shoot my team an email, schedule an appointment. We look forward to working with you here, if not already, here in the future. Thanks, everybody. Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.